Hey everybody, Chris here. A lot of questions about buying on the dip, so I thought I would just make a quick video and show you how I have been able to beat the S&P 500 buying on a dip. Giant disclaimer, I am not a financial advisor, and two, I cannot predict what the market is going to do, but these are proven methods from the greatest investors of all time. Particularly the Warren Buffetts is where I really got a lot of this strategy from. Warren Buffett does say when he dies, he is going to have all his investments, his estate in the S&P 500. That's how strongly he believes in it, being the greatest investment of all time. And one of the other things he always talks about is buying on the dip, buying when things are on sale. So here's how I buy on the dip. So right now the S&P 500 is rocking, right? So this is Tuesday the 22nd, recording this video for my Wealth Wednesday on the 23rd, and we currently have the S&P 500 at 58.56. This year, I bought the S&P 500 right here in mid-April when it hit 4,900 and went just below 5,000. And then, so I went in very heavy here on April 19th, and I also went in very heavy here beginning of August. And so now I want to show you how I did it. So I am in my Schwab account, and this is Schwab. Whether you're invest, with Vanguard or Robinhood or E-Trade, all are going to have similar type of things. So you can see I'm in my securities alerts tab, and so once I'm in here, you can see I already have a number of security alerts set up. You don't need to get this fancy. That's one of the things about this. You really don't need to get this fancy. So I'm probably a little fancier than the average person should be. There are some people that love this stuff, in which case, great, get fancy. But for average person, we don't need to be following a bunch of securities. So what I want to do is I'm going to go in here and create a alert based around the S&P 500. So the ticker for the S&P 500 is SPY. Or you should be able to just search that and select SPY. And so once I get in here, it's going to give me a whole bunch of different alert settings. And I've set it up so it just automatically sends me texts and emails. And so, by the way, when I bought on these days right here, and as well as right here, like my inbox was full of security alerts, like buy. All right. So right now, I see the last price is $583.96. So what I'm going to do is I buy specifically on 5% drops. So what I'm going to do is I'm going to pull up my super handy dandy calculator here, and we now know the SPY is at 583.96. So I'm just going to multiply that times 0.95. Multiply times 0.95. And so I'm going to try this again. 583.96 times 0.95 is 554. So I'm going to set a securities alert for 554 and a little change here. We'll just say 76 cents. So anytime the price drops below that number, I'm going to get an alert. So I'm going to go ahead and save that. So that is going to allow me to be alerted when the market goes down 5%. However, of course, the market's a moving target, right? Especially lately when we've had quite a bull run, like the 5% drop is a moving target. So I need to be able to adjust this from time to time. And I want to really try and make this as simple as easy as possible. So what I would do now is I'd say, okay, if the price rises 3%, I need to know that as well so I can readjust my 5% drop, right? So I'm going to pull out my calculator again, and we're going to see a 584 is our last price times 1.03. That gives me a 3% increase, so 601.52. So now if the price rises above 601.52, I'm going to be notified. So I need to go back and reset my alert on the price drop. So I'm going to click save on that. And so now I have two alerts set when the S&P 500 goes either up 3% or down 5%. So a couple of my rules I want to share with you. One, just general thoughts is just know on average, there is a 3 to 5% drop every single quarter. So patience is rewarded. You can't time the market, right? So you can't do this perfectly, but the way I'm laying out gives you the best statistical advantage of winning. And so there is a 3 to 5% drop every quarter. And on average, once a year, there is a 10% drop. So just know, especially as we get close to this election season, right? There's probably going to be a lot of volatility, and there could be some real opportunities to buy on a dip between now and the end of the year. So my rules are: one, index funds, I buy on a 5% drop, right? The SPY, S&P 500 is an index fund, so I will buy that on a 5% drop. And I will buy over 1 to 3 business days. So going back to my SPY chart here, this last dip, when we got, actually there was a little bit of time that we actually got below 5,100. It didn't close there, but it got below 5,100. So I bought quite a bit of S&P 500 on day one when it was below 5,100. And then I bought a little bit more over the next few days. So I really bought it over a period of 3 days. Okay. So I buy it over 1 to 3 days. And so I kind of layered that money in. I put like a third of the money in day one. And then it went up a little bit day two. So I didn't buy on day two, but then it went back down a little bit. So I bought more on the third day. So I buy it typically over a 3-day period. And when possible, I buy on Wednesdays. Statistically, Wednesday is the best day to buy. And last but not least, I always try and have some cash on hand to be able to buy on the dip. So hopefully this video is helpful for you on understanding how I buy securities on a dip, and hopefully it will help you be a better investor and get better returns out of your portfolio. Thanks. Have a great day.